Mike Briggs is our cattle market analyst this week. American exports of beef and veal are on track for their second best year on record with data back to 1989. Through the first half of 2017, shipments were up 15% from the same time frame in 2016 and on pace to finish behind only 2011's top. Japan has been the largest buyer this year, taking 30% of U.S. exports. South Korea and Mexico follow in second and third, with Canada and Hong Kong rounding out the top five. Meanwhile, U.S. beef imports over the first 6 months of 2017 were 7% lower than the previous year, thanks in part to larger American production and shorter supplies in Australia and New Zealand. Domestically, the price for all fresh retail beef ticked up about 4 cents from June to July, reaching its highest level in 13 months. Prices for producers, however, are going in the opposite direction. The August live cattle contract last week sunk to its lowest close since April, off more than $17 from its high in early June. We talked with Mike Wednesday morning and began by asking about those recent market movements.
Pretty much one direction, straight down. We've pretty much dropped about $9–10 in 8 or 9 days.
Is this what you would expect, though, seasonally?
No, you know, we talked about this earlier. I thought this would probably happen, but I thought it would be a little more gradual, not just straight off a cliff. But that's what happens nowadays when you've got the fund money. When the money flow goes in one direction, the market goes that way really hard, irregardless of whether we really needed to. And you can kind of tell we didn't, because we're still selling cash cattle over the board. You're never doing that this time of year. This time of year, it's usually boards premium to cash.
That's what I was going to ask. Do you think they're seeing signals of supply later on that are causing them to exit?
You know, when the fund managers get going, we always push this market one way too far, whether it was too high this spring or too low now. I think the cash is obviously more representative of what's going on. I don't think there's quite as many cattle out there. And it's because we have pulled ahead almost 1 million head of cattle through the summer and slaughtered them early. Now, I think we're going to catch up on ourselves, and I think that's maybe what the market is seeing. We're going to have some struggles with supply in September, October.
So to this point, what have margins been like this summer?
Margins have been good. They've been in the black. I mean, you're not pulling it in with both hands, but you're still in the black, and that's always a good thing. As we go forward here now, we're trading some cash this week around 110. I can't believe there's very many break-evens below that, and I know after that the break-evens are considerably higher, like 15s, 20s, some of that kind of stuff, and so it's going to start hurting a little bit.
Those were bought when, just to try and set the scene?
Oh, March, April, May.
When it was starting to ride high?
Well, yeah, when the cattle market was red hot, you bet. People were selling a lot of cattle in the spring and replacing them.
Feed prices still helping?
Feed prices are helping. We haven't ran this thing out of bounds. Kind of looked like maybe we were going to for a minute, and the USDA said, nope, crop's still there. Don't believe them. I think we've probably seen our biggest crop as far as the USDA is concerned, and I think we get smaller from here, but I don't think corn goes to $5 or anything where it's going to hurt you. Those
placements numbers that we saw in the last couple cattle on feed reports were high and even higher than what the trade was expecting. When we get next week's cattle on feed report, do you expect we'll see the same thing?
I don't expect it, simply because the feeder fat swap is so bad. In other words, you can't sell your cattle and buy cattle that make any money, so we're just feeding the ones we have. That's going to be detrimental to the market, though, as we move forward. We make our cattle, we already know we're going to have a big supply coming. Then if we add pounds, now we add tonnage, now we get ourselves in a little bit of trouble, I'm afraid.
Interesting from your perspective where they're coming from, those higher placements.
It is, because I'm not doing it, and everybody I talk to is not doing it. I don't know. I think it's the bigger players. They want, you know, they've got those big feed yards they got to keep full, so they're keeping them full.
Describe how strong beef exports have been.
Exports have been excellent. We're up 15% over last year. A lot of that's due to the value of the dollar. It's in our favor. It's lower. And plus the fact beef just isn't so incredibly high as it was last year, so it's a great value. And we're not only seeing good export demand, we're seeing good demand, period. I think the consumer feels a little bit better. The prices in the retail store are much better than they were last year, and so people are more comfortable buying it, and that's really helped this thing quite a bit.
Comfortable with the level of meat prices?
That's a really good question. We did it to ourselves again. We got it too high in the spring, so we've had to have a pretty big adjustment, but I think we're pretty good right here. Hopefully we don't have to work beef a lot lower. Hopefully demand will stay in there. I think it will. Pretty good opportunity for retailers, so I think this thing's going to be okay. It's just going to be if we put too much tonnage on this market.
We're talking after a big rain event across Nebraska, but overall, in August. What has performance been like?
Performance has been tremendous. This is one of the best cattle feeding August I can remember because it's just been amazing. Now July, that was another story. We started sprinklers the 6th of July and ran them every day till the 24th of July. That was awful. But amazingly enough, the cattle don't seem to be hurt from that. They've come back. The weather's been fantastic and they're really putting on the pounds.
All right, to close out with, tell me how you think supply impacts prices over the next few months here.
I think we're going to struggle for the next 30 or 45 days, which is going to, there's all kinds of things that come from that. You're going to have a tough time in the ranching sector selling your calves for very much money because I think prices are going to be depressed. On the other hand, it's going to give feeders an opportunity for a little better swap. Once you get that swap straightened out, you might see these cattle go to market a little bit better and not be so big, and that'll help us out. But I think we're going to struggle here for 30 or 45 days.
One follow-up question. Has the rancher paid as much as you thought he would?
Oh, I think he has, because on top of poor prices, you've had a little bit of a drought in some of those areas, you know, especially up in the Dakotas. It's been really hard on him. So I think the rancher's gotten the dirty end of the stick this year.